Oil prices have slumped thanks to hopes of a fresh supply becoming available in the market. The widely used crude benchmark Brent has lost around 1% to trade at around $94 a barrel. It follows news of the potential revival of the Iran nuclear deal, which would allow Tehran to openly sell its substantial reserves to international customers. And there was good news out of the U.S., with regulators there saying shale oil production is expected to rise to a two-year high in September. But prices are also falling due to the expectation of weakening demand. Economic data from China showed a slowdown in factory and consumer activity in July. That's as the world's second largest economy grappled with lockdowns in major cities. China's also under strain due to excess debt in the housing market. Now, for more, let's go to Danni Hewson, financial analyst at AJ Bell in the UK. Welcome back to the program, Danny. Now, let's look first at the potential Iran nuclear deal being resurrected. How much of an impact would that have on oil markets, given how important Iran is in a properly functioning energy industry?
Well, if you just think about the number of barrels per day that OPEC has said that it's going to increase supply by in September, that's 100,000 barrels per day. And then you look at how much oil Iran's state media says that the country is currently exporting, that's around 1 million barrels per day. Now, Iran's first vice president has said that if sanctions are lifted, it could ramp up productions to 2.5 million barrels per day. And there are some people that suggest they could potentially go even further. So that just demonstrates an extra 1.5 million barrels a day potentially out there in the marketplace. And that, of course, will have an impact on prices, something which every motorist, every business right around the world at the moment will be looking at very carefully, because with the oil price being so high recently, that's been one of the things which has fueled inflation. So people will be looking very carefully to see whether or not this deal does go through.
So another thing that's having a profound effect on oil prices is the demand side. Of course, weak demand in China because of the slowdown of the economy there. So how much of a bottleneck is the Chinese economy right now to the rest of the global economy, given their substantial trade links with a lot of other countries?
Yeah, I think the fact that exports have slowed, the zero COVID policy is obviously impacting workplaces in China. Also, crucially, consumer demand has slowed in China, although it did uptick a little bit last month and again a little bit this month. It wasn't by as much as people had been predicted. And that is the key thing, really. It is all about expectation. When you think about it, in terms of the global economy, the Chinese consumer, the US consumer play a massive part in keeping the health of that economy ticking over. We have the US technically in a recession, and although China is still growing, it is growing by far slower numbers than had been thought. So all of those plans from businesses to ramp up growth through the back end of the deal, all of those businesses still struggling to get bits and pieces because of supply chain snarl-ups. This news out of China is not going to be welcome at all.
All right, Danni Hewson there at AJ Bell in the UK. Thank you for joining the program.